Hello and welcome again. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today we have two special guests for our Friday Insights edition. Let's get right to it, and thanks for watching. So here we are with my special guests, both of my daughters, just two of the four of my children, but they're the ones in the middle, right? So we have our second daughter, Brooke. Say hello.
Hi.
And my third daughter, Ashley.
Hello.
So why don't we have self-introductions and a little bit about yourself, what grade you are going into in high school right now. We'll start with Brooke.
My name is Brooke. I'm 16 years old. I'm going to be a junior in high school, and I play volleyball and beach volleyball.
Awesome.
My name is Ashley. I am a sophomore at Xavier, and I play basketball, track and field, and cross country.
Awesome. So you love to run. God bless you on that one. So today's Friday Insights edition, we're going to go through it's never too late to get the next generation, the younger generation, interested in investing. You know, last year has been crazy. The last year and a half, 18 months or so with COVID, and the world got turned upside down. And, you know, we spent a lot of time together in the Schein family, as everyone did, at their kitchen table, right? Everyone had to basically stay home for several months. And as we did that, you had the opportunity to get interested in investing. Now, while we do that for our clients on a daily basis, especially for next generations 1, 2, and 3, for multiple families that we manage money for, we have the ability within Blanke Schein Wealth Management to connect on many levels. So let's call it the younger generations. And so it wasn't too far of a stretch of imagination when we're sitting there in quarantine talking about the market and the world around us and craziness. And I told them, you know, this is the perfect time to, you know, start looking at, let's take some money and let's invest it for you. But I want you guys, you girls specifically, to come up with ideas and let's see what happens. And today, my girls were in the office for a progress report to see how well Dad did as well as we did together collectively in terms of their performance report. So how'd the performance report go so far? And so basically, gosh, since last April of last 2020, we saw the market was super low and we decided to jump in, and you looked at some stocks that you guys follow and pay attention to, but more importantly, your peer group, what your friends spend money on, what your older sister Taylor spends money on, and where you guys spend your time, right? And that is very important because, as Peter Lynch once said, that's empirical evidence. He used to take his teenage daughters to the shopping mall back in the day, and he'd watch where he would sit in the bench and watch what stores his daughters went into. This is a true story in his book. And he basically said his teenage daughters taught him this one stock that he went back and he put in the portfolio and is one of his best portfolio additions to the Magellan portfolio. And he watched his daughters walk in there, and he came back and had his research team work that particular investment idea into the portfolio years ago. And that was one of the best performers that Fidelity Magellan has ever had. And Peter Lynch specifically talks about that in his book. And just by noticing what his daughters are doing and into and what their friends are as well. So let's go right into the next edition here as to what we can learn from our daughters and how they've been investing. Okay, so let's get right to it. So their performance report, let me go through the performance report. Now, this is not typical for everyone, and we're not talking about performance for any other purpose, but this is relative to them based upon their portfolio. Again, I am a professional as their father, and we had a conversation what's individual for them and how to invest best for them. Now, these results are not typical, right, for everyone. That being said, who wants to start? Who wants to go first with their performance?
I'll go first.
Okay, so Brooke, your 1 year return, last 12 months return, your portfolio is up 101.5%. It's pretty good. How about Ashley? Ashley, your 12-month performance is up 104%. So who won that one? Ashley won that one. How about since inception? So a little bit longer than a year, like we said, about 15 months when we started your portfolios. Ashley, you're up 127%. Performance-wise, and Brooke, you're up 137%. So who won that one?
Me.
All right. So this is so year to date, you're about 30 to 32% respectively, performance-wise. Again, we're only 8 months through this calendar year. But how did you guys come about some of your investment ideas to put in the portfolio? Because those results are not typical.
Yeah, as a teenager, we are definitely spending a lot of time on social media and technology and keeping up with all of the trends. So I think what my and Ashley's motivation was keeping up with the trends and seeing how other kids our age were acting and what they were purchasing, what they were buying, and being really into. So that's how we based our ideas.
So spending time, right? And sort of ideas where you guys, what else would you say contributed to this unbelievable result here?
A lot of the entertainment and clothing, especially clothing.
So consumer discretionary brands where you guys spent some times and where you spend your money, where I see you spend your money. So it was cool because we had a kitchen table conversation with regards to, we also did with Jack and Ashley or Jack and Taylor as well. And we said, hey, listen, where do you guys spend your time? Where do you think your friends spend their time, i.e. money? And that's ultimately what worked its way back into their portfolios. And that's how we've seen some outsized returns for them respectively. But it was kind of fun. It was one way to get them engaged. It was another way to get them interested, right? On their iPhones now, they're looking at on a daily basis sort of how they're doing. But more importantly, let's say if we had that same dollar amount, and I showed this last night when we talked about this conversation. And I said, if you had that same dollar amount in the bank across the street, right? It's your summer money. It's money you put away. In the bank basically gave you on that, let's say $1,000, the bank would give you over that same period of time, instead of the 127% that you guys got, 137% or whatever it was, the bank would give you 2.5% cumulatively over that period of time, right? It's about less than about 0.5% per year, per annum. If you put it together, that's on $1,000, that's $2.50. That's not going to keep up with inflation, especially I see how we spend money in this household. So if you put that same $1,000 to work and saw the return, that would be 2.5% or 2.5 times the return. So like about $3,500 is really what we're looking at right now in terms of that difference. That's significant, right? If you think about that as you put money away in the future for yourselves, pay yourself first, pay yourself in the future. And that's what we do with the Society of the Few, Financially Empowered Women. We empower, we educate, as well as we have the Confidence Summit, and it's the Women, Wealth, and Wellness. And you can connect with us on all social media handles. We're out there. We're educating on a daily basis. I implore everyone, especially in our book of business, our clients, if you will, reach out, send this video to anyone that could be a grandchild, a great-grandchild, or somebody, a friend or family, because our biggest growth this last 12 months has not only obviously been appreciation and taking care of our clients' assets, but also the referrals. We've gotten a lot of next generation within our clientele referred to us, and we've helped the families and helped the sort of education within families. If you're first time, that's okay too, because everyone's got to start somewhere, and it's never too early to start investing. So girls, thank you for joining me today. Did you have fun?
Yes.
Next time I'll have you guys talk more, because right now I think I did all the talking, right?
Yeah.
But Ashley doesn't really talk anyway, so we're good there. Girls, say thank you and thanks for watching, and we'll catch you again next time.
Thanks for
Bye,
watching.
guys.
Bye-bye. What did she just say?
So you told us what grade to tell them, and Brooke goes, are we talking about GPA or like A's? And Dad meant sophomore, junior.
So tell them your name, tell them your grade. We're talking about grade of school, not your report card. But thanks for telling us you have straight A's, because you do. So good job. All right, why don't we start with Ashley while you get ready for camera. Here, Ashley, what's your name?
My name is Ashley Schein. I'm a sophomore at Xavier, and I play cross country, track and field, and basketball.
How do you play cross country?
I race.
You run it?
Run.
Okay.
Yeah,
you
run.
participate in cross country. You like it.
I'm a teammate.
And Brooke, what's your name?
My name is Brooke.
Yeah?
My name is Brooke.
You're doing good. Keep going.
Okay, I'm 16 years old, and I'm going to be a junior in high school. And I play volleyball and beach volleyball.
That's amazing. So far, so good. So that's a good trial run. All right, now let's start over.